Hello everybody. My name is Yusuke Asakura, and I'm a visiting scholar at US Asia Technology Management Center now at Stanford. And prior to it, I was the CEO of a Japanese public company called Mixi. And this is my honor to be here, and thank you for giving this opportunity to share my thoughts and what I experienced at Mixi and in Japan. So let me briefly understand about the audience. So how many students are here today?
Students.
Okay. So how about the researchers? Any researchers? Okay. Is there any investor?
Industry visitors.
Okay. And how about anyone who are engaged in startup management? Okay. Okay, thank you. So, okay, briefly about myself. I am doing research about open innovation here in Silicon Valley, and I'm meeting lots of entrepreneurs daily basis and doing some small amount of investment sometimes for early stage startups. And prior to it, as I said, I was the CEO of a Japanese public company called Mixi. And today, I'd like to speak about current startup trends in Japan. And my speak is mainly about two things. The first one is a company after IPO. And there are many problems which almost all startups go through in Japan. And I would like to address these issues through the case study of Mixi. The second thing is more general topics about startup trends in Japan. And here I would pick up some numbers or figures so that may help you understand more about startup trends in Japan now. So before getting into the contents, let me briefly introduce myself. I was born and raised in Japan until I became 15. And at 15, I started my career as trainee jockey. So after graduating from junior high school, I decided to be a jockey, and I went to jockey school in Australia. And on average, you have to keep your weight under 105 pounds to be a jockey. So I tried to keep my weight and reduce my weight. And after doing that 1 year, I found that I grew up too big to be a jockey. So I went back to Japan and worked as an assistant horse trainer there. But while I was working as an assistant horse trainer, I got a traffic accident and I broke my left legs into pieces. So giving up jockey, and I changed my mind and I went to the university instead. So that was the University of Tokyo. And back in 2006, I started my company with my friends. That company was about mobile technology and social networking service. I will explain more details about the company later. So after graduating my university, I joined McKinsey & Company as a business consultant. And there I was engaged in several projects like public sector, retail industries, pharmaceutical companies, and financial institutions, and so on. And after 3 years, I got an offer from the business school at UC Berkeley. So I was about to go to UC Berkeley. But at the very same time, my previous company was about to raise funds from venture capital firms. So I needed to choose one of them. And as I wanted to study about entrepreneurship at business school, so I thought it would be rather better to do my own business rather than studying at the university. So I chose to go back to the company. So back in 2010, I returned to the company which I and my friends created originally. That was Naked Technology, maybe kind of fancy name for you guys. And the company was about mobile technology, but they changed their business from original one. So what we did was developing middleware for feature phones. So do you guys know feature phone? Feature phone is a cell phone before smartphone. It's a kind of, flip phone. Maybe almost all of them were using before smartphone. And at that time, you needed to develop the application. If you want to develop the application, you needed to developed application for all devices like Sony, Samsung, Nokia, Fujitsu. So you needed the unique application for all devices. And you see, it's very time consuming and it costed a lot to application developers. So we developed middleware, and by using it, you can develop the same application from the one source code to all devices. So we licensed our technology to large corporations, and while doing so, we developed our original application, like Twitter client for feature phone, by using our technology. So right after coming back to Naked Technology, I became the CEO. And running the company for 1 year, I found that we needed to sell the company because of the company situation. And so I started negotiation with several companies, and finally, Mixi acquired my company, Naked Technology. By the way, there were lots of stories behind the startup, and I regret that I don't have enough time to talk about that today. But almost all stories were about human drama. They were not about innovation or entrepreneurship. So running a startup, you have to deal with many people who have different interests in the company. And sometimes you have to deal with even private affairs of people. So as you can see, it's very annoying. But that's what you have to do as an entrepreneur. And you have to let people share the same interests and move people in the same direction. So from my experience, what I can say is being an entrepreneur is not a cool thing at all. But anyway, my company was acquired Mixi, and that was good for us. So after joining Mixi, the whole landscape changed. The company, Naked Technology, was a kind of company with, say, about 10 people, 10 employees. But at Mixi, we had more than 500 full-time employees and 100 to 200 part-time employees. So it's very different. And I became the director there and eventually the CEO. And there I was engaged in turnaround management of the company. So that's almost all about myself. And here I would like to discuss how startups keep momentum after IPO. So there are many pitfalls or common problems all startups face with in Japan. So that is how startups keep momentum after IPO in Japan. So we see many startups who cannot keep on growing after IPO. And sometimes we observe companies, their say, market cap and their sales peaked out at the time of IPO. And as a public company, you have to keep on growing the company. But sometimes it's very difficult because people have some sentiment to original service and they cannot find out new business to explore so that they cannot keep on growing the company. And sometimes it may lead to sharp decline of stock price. And it makes people feel skeptical toward IPO or startups in Japan. So I think it is a very important issue to tackle with to move startup ecosystem in Japan forward. So let me briefly introduce Mixi. The company was founded in 1999, and the company launched a social networking service called Mixi in 2004 in Japan. By the way, this was the very same time when Facebook was launched in Boston. And the functions were very basic things with social networking service. It was like diary, community, and photo sharing. And the service became very popular. Well, and the company was listed on the Tokyo Stock Exchange Mothers in 2006. And the service was very popular. Our Mixi became the #1 social networking service in Japan. And as our competitors stopped providing their social networking service, practically speaking, Mixi was the only one social networking service in Japan. So the service was really nice, very good. But as business, the company was not growing as much as it was expected. So this is about market cap of Mixi. This is a market cap of Mixi in the first 5 years after IPO. The market cap of the company was about $2 billion US in 2006. And as you can see, it surged the very next year in 2007, but it peaked out and it constantly declined after that. And so when my company was acquired by Mixi, the market cap was almost about 400 million. And this is the sales of Mixi from fiscal year 2011 to the time I became the CEO. So right after my company was acquired by Mixi, the top line of Mixi peaked out and it declined quarter by quarter. So when I became the CEO of the company, the top line was almost about half of that in 2011. And moreover, the company went to the red for the first time after the IPO, right after I became the CEO. So it was a very tough time. And to be honest, I didn't imagine that I succeed the company when I joined Mixi. And as a CEO of Naked Technology, I was a subject to key person protection contract, which means that you cannot leave Mixi for certain times. And actually, all other founders left Mixi after the termination of the period. But I stayed there and became the director and CEO. And what I did was a kind of turnaround management. So it was very different from startup management. So now let's deep dive into more about what was going on around Mixi. So there were so many problems we faced with. And I simplified and categorized into 3 items. So first of all, competitor. So as I said, Mixi was practically almost the only one social networking service in Japan. But around 2009, we had some kind of neutral entrant. That was Twitter. And Twitter became very popular in Japan around 2009. And while we had Twitter, Facebook opened their branch in Tokyo in 2010. And they started making some efforts to expand their service in Japan. So actually, they took over Mixi in terms of the user base in 2011. And while we had new entrants from outside of the market, we had new entrants from Japan as well. So one of them was LINE, LINE. And it was a kind of messaging application like WhatsApp or WeChat. And that service was launched in 2011 and became a very popular service in Japan. So simply, our users switched to alternative services. So we lost our users. That's the first thing. And the second thing is on the customer side. So at that time, we observed huge transition from feature phones to smartphone. And Mixi was very successful on feature phone, but it was very slow to optimize itself to smartphone. And as a main source of revenue of Mixi was from feature phone advertisement, we lost lots of revenue from it. And while we observed drastic shrink of feature phone advertisement in Japan, it took time for smartphone advertisement market to come. And moreover, major products on smartphone ad market were the products which Mixi was not dealing with. The major products were something like listing advertisement. It's like Google AdWords or ad network. It's a kind of bulk sale of web services. And they are not what Mixi was dealing with. And what Mixi was selling is a traditional banner advertisement. But it was reported that the market of banner advertisement on smartphone in Japan was almost about 60 million US dollars in Japan in 2012. 60. But on average, the top line of Mixi was about 110 to 120 million US dollars. So what does it mean? So it means that even Mixi took all 100% of the share of the banner advertisement, we cannot cover the top line of the company. So you can see this transition had a critical impact on our revenue side. So we lost our users and we lost our revenue at the same time. The third thing is about company. It is about corporate culture. And to be honest, this is a fundamental problem we needed to overcome. So Mixi was very successful and maybe too successful. So after that, we were spoiled and became bureaucratic. So here, I don't intend to criticize my previous companies. And what I would like to say is, it happens to all successful companies. So, well, we call it revenge of success because we succeeded. We got some revenge from it. So many things happened. For example, people try to escape from the reality. And, it is very hard to accept that our service is outdated at that time. And people are very creative to making up some theoretical excuses why users are not using our service. But it's simply because our service was outdated. So users were simply switched to other services, and they were tired of using Mixi anymore. So that's a fundamental reason. But it was a kind of taboo word inside, even to say. And because people had strong sentiment and strong attachment to existing service. So what went on is like people blaming one another for company situation. So you can see it is very tough time. And there are so many inconveniences. But the truth is that there were such kind of conflicts and contradictions. But while your company is successful, all those kind of conflicts were hidden by success. And one day, your company is fall into difficult times. All those difficulties come out. So I would say this may happen to all successful companies. So on the common sense, Mixi was a company of social networking service. And it is quite natural to regard that the value of Mixi is the value of social networking service Mixi. But if you shift your perspectives on it, you can find other aspects of the company. So to me, the fundamental value of Mixi were them. So first of all, capability of service development. We had lots of engineers who are very talented, outstanding, experienced. And those talents are not what other competitors in Japan had. So which means that Mixi could create something new internally. The second one is cash. So we had abundant cash. It was more than 120 million US dollars. And we raised tons of cash from the market. And as Mixi was profitable, it was okay. But we didn't actively invest those tons of cash in new business. So that was what we could utilize. And the third one is Mixi brand. In Japan, almost all internet users have heard of Mixi, even they have never used it. Today, I'm very surprised that so many people have heard of Mixi, but Mixi is very popular, very famous in Japan. And these essential values are what I couldn't get when I was running my own startup. And they are very valuable, but Mixi was not fully utilizing those values. So, well, when I was running my own startup, I often had a nightmare of running out of the cash. And I screamed and woke up at midnight. But, compared to that kind of mentality at startup, it is much better. Mixi was much easier and much better situation because we had lots of resources we could leverage. So thinking of that, actually, to be honest, I felt irritated with complaints went on. And somehow I intuitively felt that I needed to fix it. And there's no particular reason, but somehow I felt so. So I stood up and found out right people to work with and started changing the company together. So our basic strategy was very simple. A, improving the bottom line of existing business, and B, diversification through new business development and external business acquisition, and C, recreation of corporate culture. So as I said, right after I became the CEO, we went into the red. So there's no time. I immediately needed to something to do with the cost. So I tried to reduce the cost. That's one thing. But while I try to reduce the cost, I try to actively invest in new things. So some of them were new business, which we developed internally, and some of them were external business. We acquired them. The situation was that our PL, profit and loss, was very bad. We were in the red, while our BS, balance sheet, was quite perfect because we had tons of cash and no debt. And what often happens with the companies with the red is that the company become a bit conservative and stop investment in new business. But I took different approaches. I aggressively keep on investment in new businesses. So the basic idea is that converting present cash into cash flow in the future. So we needed something new. So with new business, we can generate future cash flow, and we can shift our employees from existing business to new business. And in Japan, generally speaking, you cannot lay off or fire people. So as management, you needed to find some new business, or you need to create new business for employees. So we were calling it lifeboats. It was something like building lifeboats for people to escape from Titanic. Well, so that was what I did. So while we reduced the cost, we invested in new business at the same time. The third one is about corporate culture. So we needed to try new things. So in order to do that, we tried to foster entrepreneurship and encourage people to start something new. And well, Mixi used to be the very high-growing startup. So it was a kind of process getting back that kind of mindset to the company. So again, it is very simple strategy. But at that time, nobody really understood what we do. Because in general, the Mixi was a company of social networking service. So even employees or journalists didn't understand why Mixi do something else other than social networking service. But I do think that kind of bias or sentimental attachment always interrupt company growth. Those kind of prejudice interrupt company to create something new and keep on growing. So there were several action plans we took, and here we did them, and we made lots of mistakes. And here I don't want to read out all of them, but what we essentially was doing was moving the company beyond the original business. So we did many things, but that was based on coherent principle of moving the company beyond the original business, because that was how we grow the company. And we took lots of actions and made mistakes. And after that, we got lucky. So first of all, one thing is Blockbuster app. So we developed several applications, and almost all of them failed, to be honest. But one of them became a smash hit in Japan, and it became the most popular gaming application in Japan. That was Monster Strike. And it was #1 application on App Store and #1 on Google Play as well. So we got lucky. And the second one is buyout of profitable services. So based on the concept of converting present cash into cash flow in the future, we acquired 5 businesses. And we were aiming at the companies with very low EBITDA multiples, and we acquired them. So we acted like somewhat, say, buyout funds then. The third one is assignment of underperforming business. So right after I became the CEO, I spinned off one underperforming division. That division was, say, there were about 100 employees. And that division was, say, it used to be performing, but it didn't fit the corporate situation at that time. So we spinned it out and let them run for a few months. And then we found a company who would like to acquire that division. So though I said underperforming, it doesn't mean that employees out there were underperforming, because they were awesome. And actually, I've had lots of many stories about them at new companies. But sometimes it happens that the division, which used to be very functional and performing, doesn't fit the company as time goes on. And at that time, you have to make a difficult decision. So that's what I did at Mixi. And after, as a result of those triggers to regrowth, we saw significant growth of sales like this. So we went back to the monthly break-even on the third quarter after I became the CEO. And what's exciting more about it is it's still growing. It's growing now. And Mixi, I'm very sure that Mixi gonna be Mixi is still growing, and it'll be the most profitable year this year. And as a result, market cap jumped up. So as I said, when Mixi went to public, the market cap was about 2 billion users. And when I became the CEO of Mixi, that was about 200 million. But after 1 year, the market cap jumped to like almost about 5 billion users. So we got lucky. And finally, we overcame the difficulties almost all startups face with. So here are some lessons I learned from the case. So first of all, obligation to grow. So as long as you are running your private company, it's up to you. You can do whatever you want. But as a public company, once the company becomes public, or the whole situation gonna change. And you have some obligation to grow because going concern is assumed for public companies. But it is always difficult for some CEO to do so because there's some conflicts between the business and the going concern company. Because each product or each service has its own lifetime. And no service or no product will grow forever. So looking at GE, you can find that they are always constantly changing their business, and they don't have their original business anymore. So in order to grow your company, you have to go beyond what you were originally. But sometimes it's very difficult because people have some sentiment to the original service, and sometimes CEO cannot make a difficult decision to do so. And if the CEO cannot make the difficult decisions to grow, he or she has to get out of the company. That's the principle. And because it is too bad to have the CEO who cannot make a difficult decision. And it is not only too bad, it's unethical because we have some obligation to shareholders. And it is a very basic principle, but often missed out by many Japanese companies. So I would like to emphasize that if the founders or the CEOs cannot make decisions, you are not the right person and you should go out. That's one thing. The second thing is brave new frontier. So in order to grow your company, you have to keep on creating new business. And on the way developing a new business, you may think that it takes too long to take off for the new business, or the new business would be too small compared with existing business. But you should forget about current sales or profit margin if you'd like to start something new. Otherwise, you cannot start anything. And on the way you developing new business, you may want to create business which generates some synergy with existing business. But the truth is there is no synergy. The truth. And because each division has their own agendas, and nobody wants to be interrupted by new business which they don't really care about. So what you can do is let them go and separately, and let each business go what they want. And when the time comes, when the new business grow enough, one day the division of existing business come and say that they would like to start something new with a new business. Then the so-called synergy may be generated. But before that, I think synergy is a hype of investors or investment bankers. And on the other hand, you may not want to generate new business which may compete against your existing business. But I do think that you should accept cannibalism. So you should overcome what you created by yourself, because otherwise someone else gonna take all over your market. And finally, big company disease is preventable. I think that is the most key message here today. But the problem is that you have to think of prevention while your company is growing. And when the company is growing, nobody really take it seriously. But you need to start some actions to prevent this kind of disease. And well, when the company is very good, nobody really care about conflicts or contradictions. But one day, your company fell into a difficult time, and all of a sudden, those kind of symptoms with big company disease will come out. But truth is, they won't come at one time. The companies were already in big company disease, but all success hide all these kind of conflicts and contradictions, and one day you just realize that. So that's what I learned from my experience at Mixi, and it's almost about it. And at this section, I would like to discuss startup trends in Japan. It's more general topics. So let's start with a kind of macro figures. So this is a real GDP of Japan in the last 20 years. As you can see, it's almost flat. And compared with other countries like United States or China, GDP of Japan hasn't shown significant growth for the last 20 years. But if you divide the GDP by sector, you can find different aspects of Japan. So this is the real GDP growth by sector. And as you can see, internet service and mobile communications are showing significant growth. And they are the key drivers for Japan's economic growth. So that's why there are so many startups in these sectors in Japan. And this is about IPO activity. And as you can see, recently we observed more and more IPOs in Japan. And it seems like that Tokyo Stock Exchange is becoming a bit more flexible to giving approval to companies to go public recently. And the distinctive point of Japanese market is that the market cap is relatively very small. So it is said that median market cap at IPO on Tokyo Stock Exchange Mazars in 2013 was about 55 million US dollars. So it's almost like the valuation of Series B or Series C startup here in the Silicon Valley. And it's very controversial. It's a kind of ambivalent. In good sense, it is Tokyo Stock Exchange Mazars is the most accessible market for startups. So even small startups can raise risk money from the market. That's a part of good reasons. But in a bad sense, even immature startup can go public, or startups cannot raise enough money to grow after that. So that's about the Tokyo Stock Exchange Mazars. By the way, MAZARS stands for Market of the High Growth and Emerging Stocks. So there are other, it's like NASDAQ, and there are other classes on Tokyo Stock Exchange. And it is about venture financing in Japan. And current government is aggressively, actively supporting people who are trying to start new business in Japan. And typical case is venture finance. Here I picked up two government-backed fund organizations. So one of them is INCJ, is the Innovation Network Corporation of Japan. And they capitalize at $3 billion US, and they are actively investing in startups. And while they are investing in startups, they are investing in venture capital funds as well. The second one is SME, and that organization mainly investing in venture capital funds. And besides these governmental activities, nowadays more and more companies are trying to invest in venture capital funds. And that's partly because they cannot find new business field by themselves, but partly because they are becoming more open to collaboration with startups. And it is not only about internet-related companies. Even very established companies like consumer electronics manufacturers, airlines, or pharmaceutical companies are investing in venture capital funds these days. And some unique point we observed recently is that so-called independent venture capital firms are playing active roles recently. So traditionally, venture capital business was the business of financial institutions. But what we see now is that more and more independent venture capital firms are playing main roles. You can see some figures on the right hand, and almost 50% were taken by that kind of independent VC firms. So these are the typical VC firms, and some of them were founded in the last 3 years. Maybe it's partly it's because it's easier to raise funds these days. And this chart shows the average ratio of stock price to the stock price before go IPO, the final round, pre-IPO round. And from 2007 to 2012, it was almost two times. So considering the high risk of venture capital business, it's not attractive at all. So I think it's quite reasonable for financial institutions didn't do a lot in venture capital business. But recently, these figures are surging, and it's very encouraging to see that finally venture capital business pay off now in 2013 or 2014. So as more cash coming into venture capital firms, more cash going into startups. So these are kind of figures, the investment volume by these venture capital firms. And please note, these figures are not comprehensive. As you know, the access to all these are very limited. But at least you can see some kind of trend. And these are some examples of sizable private finance in 2014. And though these kind of figures may not come as surprising in the United States, it's very common to see something like 50 million fundraising here in Silicon Valley. But these figures, what we could not observe 5 years ago. For example, Naked Technology, my company, raised fund in 2010, and we raised $1 million US. At that time, it was a kind of outstanding deal. And this is just my rough guess. But at that time, in 2010, I think there were less than 20 companies who raised more than $1 million US. So you see, it changed a lot in the last 5 years. So it's something awesome. And some other phenomena we observed recently is that more and more pre-IPO startups going global from the beginning. So it was very common to see companies go global after IPO. For example, Rakuten, DNA, and Glee are very active here in the Bay Area as well. But what we see now is more and more pre-IPO startups going global from the beginning. And maybe it may come from the sense of urgency. Nowadays, it's the era of smartphone, and we are sharing the same platform globally. And which means that you can be easily defeated by external player. So in order to survive, you have to be the global number one player rather than regional number one player. So, so companies are starting going abroad from the beginning. And finally, this is about acquisition. Generally speaking, Japanese companies are not quite active on acquisition deals. So compared to the United States or Germany, Japan is very slow or very low on the size or the volume of acquisition. And even some people say that acquisition is a kind of unethical activity in Japan. And I don't think it doesn't make sense. But some people have some kind of conservative and negative attitude toward acquisition, and it is also true for startups.
Asakura-san, can you explain the slide a little bit?
Mm-hmm.
The columns are Japanese companies, and then across the rows are the acquirers.
Yes.
So 117,000 instances of an American company acquiring a Japanese company?
No.
Or is it the opposite?
Opposite. So let's say 2,198. That's the total volume of deals done in 90s.
Yeah, okay.
And it's, Japan X, US done 32 more.
Oh, I see.
To 8.8 times more. And from 2000 to 2013, still there are a huge gap. Let's say if Japan is 1 and the US is 6.3. And comparing the GDP, you can see Japan X, Japan 1 and the US 3.4, and Germany would be 0.8 of Japan. But still, there are more deals in Germany.
Okay. Those are ratios.
Mm-hmm. But recently, we are observing this kind of trend is changing slightly. So we observe more and more acquisition deals in Japan. And especially, say, young internet companies are actively seeking startups to acquire. And maybe that's because they are recognizing they need to do acquisition and acquire external companies. So I think it is quite important to work to move Japanese startup ecosystem going on. So I hope to observe more and more acquisition deals in Japan. So this is the last chat of this presentation today, and it's about my observation and my thoughts about startup ecosystem in Japan. So first of all, there is a strong demand for startups, but not enough supply. So we observe huge change in the last 5 years, and the biggest change is the cash. There's more cash, and there are more investors who would like to invest in startups. But there is not enough startups. And frankly speaking, nowadays, the cash is almost commodity in Japan. But, what is needed is ideas and talents. And there will be no simple solution. But I think we need to lower the bar to start their own business in order to increase more entrepreneurs. The second one is scarcity and immobility of talents. So what we observe now is a war for talents. And actually, I got many inquiries from entrepreneurs, and they ask me whether I know good engineers and how they can hire and get good talents inside. And many startups compete one another to hire people. So, but because of scarcity and immobility of talents, there is not enough people. And I think there is something to do with education. And at the same time, I think we Japanese need to change the how can I say, in Japanese, to rethink of work style. So in Japan, maybe you may heard of this, but lifetime employment is very common. So once you join the company, you keep on working in the same company for the 30 years or 40 years. And if you'd like to increase or accelerate startup ecosystem, you need to rethink of that. And the final one is more acquisitions are needed. And when it comes to starting new companies, somehow Japanese tend to think they have to make the gigantic companies like Honda or Sony. And that's very awesome. But sometimes I feel that people have some obsession to have too big aspiration. And it's okay if they like it, let them go. But well, as I said, I think it's very important to lower the bar to increase more entrepreneurs. And in order to do that, we have more exit options other than IPO. And here, acquisition deals are very important. So in order to have more entrepreneurs, I think we need to establish entrepreneur or serial entrepreneur as career. And in order to do that, the career should be rewarding. And the way to reward is acquisition. So even some people still criticize entrepreneurs who aim to buy their company originally. But I think it's very ridiculous to criticize them. And we need more entrepreneurs to sell their company or go IPO. So in order to activate startup ecosystem more and more and keep current momentum, I think we need more acquisition deals and more talents and lowering the bar to start something new by people. So I think I covered almost all of my presentation. Thank you for your patience.
Thanks very much. You know, unlike a lot of our speakers that I only get to talk to for, the week or two before they come, we've been kind of working together since, last fall.
Yep.
So I want to ask you, has your thinking changed since being here in Silicon Valley? And has anything really impressed you that you didn't expect or anything like that?
Well, I think, let me see. I imagine that startups, entrepreneurship or creating some new companies are quite active here in Silicon Valley, but it was much more than I expected. And I think it's because of there are so many people doing their own business. Because I think maybe there are so many entrepreneurs at Stanford University. But back in Japan, at the University of Tokyo, you cannot see so many people. And they would like to work for the government, or they would like to work for some big organization like Mitsubishi or financial institutions. That's okay. But some role models and some of your friends who start something new. So I think that's one of the reasons why there are so many startups. Because there are so many startups and you keep on meeting people, and one day you think that you can do that by yourself. So that's the biggest part. But in Japan, you won't see lots of entrepreneurs, or you may not have friends who are doing their own business. So you cannot come up with the idea of starting your business by yourself.
Okay, that's great. Let's open the floor. All right, go ahead.
Thank you for wonderful speaking, Asakura, and we know that it's quite difficult to pull up like the dying company to a very prosperous one. So you did a very good job. So here's my two questions. The first one is, I'm very curious about why you quit like your company, because we have already seen that it is like dying, but you have made it very prosperous. But why you quit now instead? This is the first question. The second question, you have already like emphasized a lot that the Japan do not have like so much entrepreneur, and Mr. Professor yesterday told us that the T rate of the Japan is like quite low compared with China or United States, and Maybe because I know a little bit about the Japanese nationality, so I just make an assumption. Is it because like the Japanese has like hierarchy? I because like a younger person, we have to give respect to the older one. So is it because like in Japan that this like young people should do more about the inner innovation within the big company? Just like the one thing about like to do entrepreneur outside.
So this is two good questions.
Yeah.
Why did you leave Mixi? And the second one is really, what's the sort of cultural kind of background for entrepreneurship in Japan? Is there something about preferring hierarchies that make you want to be inside one?
Okay. So the first one is why I left the company, and I was engaged in turn around the company. And actually, I didn't expect the company come back so early. I expect I was sure that I can regain the company, but it took 2 years. So I thought it takes 2 or 3 years more to bring the company back again in the market. So it was very early. So that's my honest opinion. But though as I thought I recognized my role was turning around the company. So there's no reason for me to stay there more. So just simply I wanted to come to the Bay Area. So that's another reason why I left the company.
And about sort of cultural basis for entrepreneurial
Cultural
attitudes?
base. So you mean why there is not so many entrepreneurs in Japan?
I mean, maybe Japanese like teenagers, they only like to do inner innovation within the country. Don't want to go out and start. Is that
Okay.
the reason?
I don't know, but maybe it's very comfortable living in Japan. You'll be surprised. Have you guys ever been to Japan? No. And if you lived in Japan, you found it's very easy to live there. So it's very bad if you are not with your job, you may get some sense of urgency to go out. But still, we observe shrinking economy, but you can have good time in Japan. So I think there is no huge passion or huge good reason to go out of the country or starting something new by yourself.
Too comfortable. That's interesting. Go ahead. I saw your hand first. Okay, I saw your hand next. Go ahead.
Sure, me. Okay. Thank you for your talk. My name is Vishnu from Indonesia. I was going to ask two things. The first one is what are the kinds of startup companies that right now are big in Japan? Because I see from the list of companies that are being acquired, most of them are like platforms for tickets, for news, and for everything. So are there like other kind of startup companies that are also big? And then the second one is what are the open innovation scene? Because I know that you are right now currently researching about open innovation, and what is the current situation of open innovation in Japan?
Thank you. So about the type of startups like industries. So as you can see here, the companies shaded is internet-related service. So obviously, internet or something about mobile technologies are the main part of the startup. And there are some companies about biotechnology or automobile, wheelchair, chemical, but they're very low because it costs a lot for starting new. So by the way, I was surprised at YC demo day the other day, and there were so many companies about pharmaceuticals, healthcare, or bioengineering, and we don't see so many such kind of startups in Japan. And mainly because those people are still staying in the huge corporations, large corporations. But looking at the internet industry, it's very young industry. Let's say maybe 15 years or 20 years. So it's quite common, something new. That's a kind of the culture of the internet companies. So it has good reason to we observe so many internet-related companies or startups.
Can I follow up? So are there any parts of the internet industry that are already crowded with players?
Well, something about mobile, and of course mobile application. consumer mobile application. That's the main part. But we see some advertisement technology, or say some cloud service for enterprise as well.
And you had also asked about open innovation in Japan.
Open innovation. So now it's what I observe is a kind of momentum. So they are starting to open the gate. But let's say 3 or 5 years ago, they didn't really care about startup or let's say small companies. But recently, what I observe is that they are opening gate and to collaborate with together. One of the activities like investment in venture capital firms. So they are trying to do some research through venture capital firms, and at the same time, some say corporations like real estates. They are trying to the startups rent their room, and they are opening some sort of incubation centers. So which we couldn't observe 5 or 6 years ago.
Okay, good. Let's see the hands again for everybody who wants to ask. Go ahead, you first.
To what extent does private equity have a role in acquisitions in tech startups in Japan? And do you think that's an area for maybe increasing acquisitions going forward?
Private equity.
You said crowd equity.
Private
right?
equity.
Private equity,
Private
okay.
equity,
Do you mean buyout funds like?
As in like private equity funds buying tech startups in terms of like giving an exit opportunity.
So far, in general, private equity funds are not so active in Japan. That's very general said. And in my memory, I know only one case, one company which was acquired by private equity funds, and the company went IPO last year. So that was quite successful case. But maybe I think tech startups are not a good target for private equity funds because those companies don't have assets. They have only people and technology. So it doesn't make sense if people went out after they gained the companies. So I think this still private equity funds aim at some kind of business with lots of assets, and it's gonna be going on.
Okay, I saw your hand. You've been patient. Go ahead.
Okay, so thank you. I'm Louis from Hong Kong. So I want to ask, like, within a year, you have done such a tremendous change within Mixi, the company. So have you faced any challenge, or like such as when you assigning different departments? So do you have any challenge? If you have any challenge, how do you overcome them?
So some example of challenges.
Yeah.
Okay, of course.
Especially with the reassignments, right? Giving people lifeboat jobs.
Yes, of course. There's so many, and it was almost about again human drama. So to be honest, I think it is not so difficult intelligently to change the company, because it's quite straight. You should do what you should do, but the difficult part is execution. So there are so many people stood up and went against the way the company go. So that's the point. And to be honest, I think, well, say logic or strategy compose 10% of success, and 40% of efforts are made by execution or some kind of guts, and other 50% are by lucky. That's my observation.
Okay. Go ahead.
So I want to ask, during the process of the revive of the Mixi, how the user base and the user engagement change? Is there also a surge, or it's because the revive because some other business unrelated to social network?
So you mean the user activity on the social networking service after company started regrowth? Okay, so as I try to separate those business, as I said, there's no synergy, and it will take time if you are trying to generate synergy, because both parties will be hesitant to collaborate each other. So I try to separate each business, and I didn't try to generate any synergy. So there's not huge change on social networking service side.
Okay, go ahead.
Mr. Asakura, thank you for your presentation. I was wondering how you think the upcoming Tokyo Olympics might impact the startup environment in Japan.
I do think so. So yeah, I do think so. So That's not, I think, rational or logical reasons. But we have a huge event in 2020, and it loosened people's wallet. People are more willing to spend more money, and the governments are more actively keep on investment. So I think this kind of momentum keep going on. But recently we observed some bad sign of the momentum, because, for example, like I explained, some startups fell into the pitfall I explained, and some companies, some startups peaked out their market cap or sales at the IPO. So this kind of situation make people feel skeptical to startup. So we need to do something. We need to fix the situation. But without that, I think, or I hope, the situation will be going on.
Okay. Go ahead.
So you mentioned in your turnaround of Mixi, there were those 3 triggers to regrowth, and one of them was that Blockbuster app. To what extent did you expect that app would be a big factor, or did you think it would be some other investment that would lead the turnaround?
Well, thank you for raising that point. And the upside was led by the smash hit application. But what's important is that Mixi was returned to break even without the application. I acquired companies and I assigned the companies, and by doing that, we returned to break even, even without the smash hit application. So that's a very, very important point. So you cannot expect how much it soars or the upside, but you can control the bottom side, and we did that.
Okay, thanks. Got a question over here.
Yes, you had mentioned about acquisitions, attitudes that you described as conservative and negative, and even views of acquisitions as unethical. Can you tell us a little bit more about that?
I don't know why, to be honest. But I think, so there are some Japanese people here, and I think almost all of them can understand what I'm trying to say. There are some, in Japan, the company is a kind of family. You may have heard of that. And it may be because of lifetime employment. So someday, it is like, acquisition is, some other company someday come and acquired your company. It is something like your stepfather came and I would be your father from now on. So, people have some kind of, conservative attitude toward that.
Excellent. Go ahead.
Yeah, I was recently at the Osaka Innovation Hub and see the resources that they're putting around that. So from your perspective, what support and resources do you think Japanese entrepreneurs need?
You mean from the government side? Or?
Either government or university or some type of collaboration?
So thank you. And I think the important point is other than cash, because cash is enough in Japan. So it is how encourage people to try new things. And I don't know what to do with that, but maybe people who start their own business always concerned about their security. So if they failed, they have no chance anymore. So if we could do something with that, we can change the whole situation or whole tide.
Can I follow up on that question?
Please.
I'm curious about your perceptions of how people do mentoring here versus in Japan. Do you feel like you had a real set of mentors when you were at Naked Technology or even in Mixi, as opposed to here where mentoring is a big thing in the Valley?
I think so. Well, let me see. At Naked Technology, I guess some people who could advise us, but actually there's not so many entrepreneurs. So there are only few people who can give good advice on us.
Yeah.
So someone was very helpful, but some others were even unhelpful.
Unhelpful.
To be honest.
Okay. One more question from the floor. Go ahead, Shan.
Hi. I got a question about the Japanese startups recruiting. So, like, where do those startups usually recruit people from? And also, are those people who actually go to startups outliers of the Japanese society, or so? Because I heard like Canada also.
Okay. So where those entrepreneurs come from?
No, I mean like for those startups, where do they recruit people?
Recruit people.
Yeah, and what kind of people are they targeting?
I see. I see. Okay. So as I said, the whole startups are mainly in the internet or mobile sections, mobile sectors. So they are trying to hire people from the big companies in these sectors, like telecom companies or some established web service companies. That's one thing. And the other way is hire people from other startup companies. That's another thing. But it's very rare for us to observe people from very establishment companies to come to startups, and I think the biggest contribution that gaming company in Japan made is that they hired so many people from established companies like financial institutions, trading companies, and consulting business. And those people who came to those gaming companies, they may stayed inside the company or they started something new by themselves. So, those gaming companies, mega gaming companies in Japan played the role of, shifting people from established side to new market. So that's what I observation. That's what I observed.
Okay. Last question is from me, and it's
Okay.
kind of about your future. Knowing now what you know, in the future, would you like to start your own company again?
Yes.
Okay. That's a great answer.
Thank you. Thank you.